So a very good evening to all of you. My respect to the respected members on the dais, the guest speakers, of course, a very, how do I say, expert gathering on, many of the topics. So my role is just to talk about, how the budget would have impacted the stock markets or how it has impacted the stock markets. Specifically what stocks or what measures you think or we think would have been there. So, very important as, the speaker before me was mentioning, Dr. Sagar was also mentioning, is to understand the backdrop in which this budget was presented. So this was the first full budget of Modi 3.0. The background, considering the fact that the growth was slowing down, the global trade headwinds were there for global trade. So the slowing GDP. So this is something that we really need to consider when the government is presenting the budget. So this scenario, when we are talking about India, the growth rate, the GDP, this budget, the setting in which this budget was presented was actually in conflict with what we wanted to happen. Having said that, the expectations from the budget was fairly muted. Going into the budget, it was fairly muted. We were talking about we needed Capex. So some sections were talking about the Capex boost that was required, infrastructure development to spur growth, investment demand. Of course, the middle class, I think after the last budget, there was a feeling that the middle class was ignored, and I think it was during the Independence Day speech that even our Prime Minister also mentioned that the middle class is very important, and the disgruntled middle class was also a very important factor, and also combined with the elections coming up, I think it was a big factor that was being considered, and so rationalization in tax rates was also expected. Of course, Geojit being a capital market player, it was not expected, but we wanted, I would say, reduction in taxes. So it was not at all expected, but that's the best thing about the budget. We can say that, okay, we want this, we want this, we want this. So STTs, LTCG, short-term capital gains, everything, we wanted some help from the finance minister, regarding that. So those were the broad expectations, if you look at it. Of course, see, as I was mentioning, infrastructure development along with fiscal discipline, in the previous budget, all these points were all mentioned, all these points, especially with regards to Capex, when it actually came to the Capex expenditure, because the time was not there, I think the government could not spend as much in the infrastructure, this thing. So this was the overall view or overall expectations that, the stock market was expecting from this thing. So what did we get? The Big Bang tax reform, I think up to 12 lakhs, tax was waived off. This will help, of course, in increasing the disposable income and also the consumption-oriented mentality of all the consumers. So the Big Bang tax proposal was the main highlight, as far as the consumers were concerned. Of course, the finance minister was also mentioning about the 4 engines, and it was mentioned earlier with regards to agriculture, MSMEs, investments, and exports. Capex allocation is, I think, where the Big Bang tax reform was announced, and Capex allocation, it almost offset each other in terms of the stock market outlook, because the market expected more in terms of Capex allocation. It was maintained as a percentage of GDP. The Capex was the same. It was 3.1% of GDP last time. This time also it is 3.1%. But so it's always about expectations, right? When it comes to the stock markets, it's all about the expectations. So the markets expected more allocation. I'm talking about in terms of GDP. There is a section that says, of course, the real Capex allocation, when you even consider the state Capex, it is actually much higher. But overall, when you look at it, the markets expected more. So that is a policy shift, I would say. I don't know if I'm using the correct term, but earlier there was a focus on infrastructure development, but now there is more focus on stimulating the domestic demand by increasing the disposable income in the hands of the consumer. So so this is a good thing, and that is one of the good things that this government is doing in terms of maintaining continuity and also trying out in terms to boost it. It is an immediate recovery, boosting disposable income. It is an immediate recovery in the economy, and that is something that this government has done. So of course, fiscal prudence and moderation in public borrowings. Of course, there was also mention of focus of ease of doing business and the compliance. So that especially, it would be more attractive to, or it would be to attract more foreign investment, which can definitely help the stock markets also. So this was the actual, from our point of view, things that have or would have impacted the markets as such. So just talking about the disposable income, I'm sure my peers from PwC will be talking more about it. But just to give a layman's point of view, we are talking about 80,000 rupees to, let's say, around 1.1 lakh rupees, depending on the tax slab that you are in, that a consumer would save. So more money in the hands of the consumer. Dr. Sagar was saying, it will get spread out for sure, no doubt about it. It is not that, more money in my hand, I'm going to spend it all on, let's say, a luxury product or something that, I would consider as, I can forego or whatever. So it is not that, the entire money will be coming into, let's say, to going into buying a product or whatnot. But definitely it might boost or it might stimulate that the demand for some products. So in that sense, when you look at it in an overall point of view, it can be beneficial for some sectors, for some companies and their products. Because even during the last budget, I think the mention or the point of the discussion was regarding the urban slowdown that is happening. There was an urban slowdown in demand. Rural economy was actually doing better than the urban economy, and there was an urban slowdown. So it could stimulate the urban economy by putting more money in the hands of the consumers. More than that, I think, systematic investment plans, I think that is a word that, a lot of youngsters are using, a lot of consumers are also using, that shift from, FDs to an investment in the market. So my impression is that at least a small percentage of it could be used or could be coming into the stock markets as SIPs also, because this would be mainly benefiting the salaried consumers. The salary, a part of it, they will be looking to save it, and rather than going into bank FDs, I feel that it could be coming into SIP. So in that sense, so it is not actually buying products of specific companies, of specific stocks. Even an indirect inflow into the market through SIPs can also have a positive impact on the market. So the disposable income in the hands of consumers is definitely a positive for the market, but maybe not a direct impact like, we're talking about consumer-facing sectors like FMCG and the allied segment. So which you would actually think, okay, more money, I might spend more on FMCG products, or even FMEG products, in the sense fast-moving electrical goods. So, the small white goods that you have, that would have more, exposure into that. Other than that, SIPs also, with more inflows coming in, our dependency on the hot money that we call as FII money can reduce. So that is more of a interesting point for us, because SIPs will definitely help the consumers. It is going to definitely, the inflows are definitely going to stabilize the markets also. Of course, not just the broad industries, but even the sub-industries that we have. For example, the entertainment industry, the quick service restaurants, the retail, this thing. So we have specific sub-industries, we have listed companies in these sub-industries which can benefit. And of course, you're seeing a knee-jerk reaction in the markets also. We had a full day of trading on Saturday on the budget day. We had a full day of trading today, and we are seeing a lot of reactions in these kind of stocks. But, from a longer term outlook, I think, the sub-industries that we have, I think they would be a much better option to look at rather than the broader industries or companies that are there in the broader industries. The next measure, of course, is what I was talking about, the Capex allocation. As I was saying, it is almost flatlined, the Capex allocation in percentage of GDP, it is almost flatlined. But that would be more of, let's say, a byproduct of the reduction in the total income. So the government has done its best in terms of balancing out, the growth as well as the physical discipline part. So the Capex allocation also, I think they have maintained it in that way. I think the finance minister was also very open in talking about the fact that the private sector has to come in. They have to come in and then contribute more. It could be in terms of, let's say, increasing capacities. It could be in terms of building new capacity. But the private sector has to come in. They have to play their part in nation building. So again, this disposable income, the boost in consumption that we want or we expect, I think if the companies are also looking at it in that sense, be it with regards to the focus on exports, be it with regards to, the reduction in customs duties, the companies can also start thinking about maybe investing more money into their capacities or building new capacities because they foresee the consumption demand to increase. So the measures are there. This budget could be the first step to boost domestic demand. If the companies feel that this is going to be an ongoing feature in the budget going forward, they wouldn't be hesitating so much to invest in themselves or invest in capacity. So in that sense, Capex, yes, from a purely stock market point of view, it was disappointing earlier, as I was mentioning, because of the expectations that were built in. Railways, for example, these are all capital intensive industries. Railway, they need funds, they need huge amount of funds to, let's say, boost their infrastructure. So it was negative for the railways, the defense, capital goods, the infra companies and all that, whatever you're seeing in the markets, the rates, whatever you're seeing, of course. But we feel that this is actually short-term in nature. I don't think, because see, defense companies, for example, they will still get their order book. They will still have a strong order book. Capital good companies, you saw L&T falling down by 4%, 5% today. They still have a strong order book. Their pipelines will keep increasing. So all these movements that you are seeing in the market currently, it should be short-term in nature. It is not a long-term impact or long-term effect that is there on these companies. So Capex allocation in terms of numbers or in terms of percentages might not have met the expectations, but it is still for the balanced budget that the government has presented. I think it wouldn't have a long-term impact on any of this thing. Some sectors that, I think Dr. Sagar also mentioned regarding the automobiles and, for example, so of course, more money, you think about spending more, it could be positive, especially for entry-level cars, two-wheelers, etc. EV adoption, a lot of incentives for that. No particular news for the financial services industry, other than the fact that, their lending business might increase. The fund to expedite the completion for housing projects, it could be beneficial for housing finance companies. So other than that, maybe more income in the household. It could, you might be there might be a propensity to borrow more also maybe. So no particular news regarding banking and financial services other than the fact that, the lending ecosystem might improve. Real estate, of course, the relief in the income tax and the value regarding two self-occupied properties, it is positive for real estate demand. Even for commercial space owners and retail space owners also it is positive because you can own a residential and a commercial place, and then so that in that sense the real estate sector is also positive. And something that we talk about, agriculture was a huge talking point. Fertilizers and aquaculture, we've been talking about this sector for quite some time, especially the aquaculture sector stocks. So the proposals that are there in the budget for fertilizer and aquaculture are also very positive. The basic customs duty on a number of products have been reduced. Of course, Mr. Donald Trump might take credit for that, but we have seen over the last two budgets the government's trying to rationalize the customs duty on specific products. So companies or sectors that have products that have, the customs duty has been reduced on those products, and it could have a positive impact on their input costs also. So we need to look at it from that angle also. So basic customs duty being reduced is positive for some of the companies as such. So going forward, as we said, a balanced budget, when you look at it from an equity market point of view, no sweeping changes, but then, in the market, no news is always good news, right? So in that sense, we feel that, okay, it is a balanced budget. The expectations in terms of, the Capex allocation, of course, all that is there, but then we expect more participation in the markets, albeit in a very, very small form. We expect more participation because of the higher disposable income. And also the KYC procedures have also, the proposal is to simplify because they're planning to have one central KYC authority. So, as in Geojit, when we talk to clients, we talk about a client's KYC. When you go to another institution, you have to have another KYC over there. So that is always a very, very, irritating part for the client when you look at it. So having a centralized KYC authority will also benefit, smoothen the procedures for participation in the capital markets. Maybe the misses that you can talk about, of course, there was mention of, divestments, job creation in terms of MSME and agriculture focus, and of course the Capex allocation not being as much as expected would be the misses when you talk about this thing. So all in all, the budget is done and dusted as far as the stock markets are concerned. So again, the shift or the focus goes back to the earnings, the corporate earnings. Management commentary has not been too optimistic regarding the current earnings season that we are facing. So corporate earnings and global developments again take center stage in the capital markets. Of course, you will see after effects of whatever the budget has proposed in the stock markets, but overall, again, corporate earnings and the global developments will be in focus. Valuation is, of course, still a concern. We've seen, the broader markets, especially the mid and small cap companies being impacted more than the large caps. Valuation is still a concern, but going forward, I think at least in the near to medium term, it would be better to have a large cap oriented portfolio, a large cap oriented investment that you can look at more than the mid and small caps. We've always been advocating the systematic and disciplined approach to investing. It could be through mutual fund SIPs, it could be through equity SIPs also, in terms of when you want to accumulate stocks, you can keep on accumulating, you can buy specific number of stocks. So it could be mutual fund SIPs, it could be equity SIPs that you can look at. Of course, this has been our stance for the last 2-3 months, in the sense FY26, we expect a range bound market. it is going to be a stock pickers market. It is not that one sector is going to outshine the other sector. No, it is going to be a very specific stock pickers market. So within sectors, you will have stocks that outperform, and it is not that one sector will outperform any other, but within the sectors, you will have stocks that are outperforming. So with that, I come to the end of my presentation. So I think we'll take questions later. Right. Thank you very much. Thank you all.
Why not? I think I will just sum up and then. Thank you, Mr. Sony Mathews. And you have just now listened to a very, I can say, the senior market strategist and the product head of Smartfolios, Geojit Financial Services, a career spanning 15 plus years in capital market and research across various roles, advisor, analyst, etc. He has, in fact, made a very brilliant analysis of the budget proposals, making an introduction that is a big tax proposal to benefit the middle class, which is going to put in about 1 lakh crore rupees in the market, which will definitely boost the demand as well as the savings. And the presentation of the sectoral impact and the proposal which is going to have an impact is